Want to uncover how a sweet 33% profit with Bitcoin was achieved in just over 3 weeks? It's all about strategic swing trading, and we're about to dive deep into it. Keep watching because we're also going to analyze where BTC could potentially be headed next, including critical support and resistance levels that could signal your next trading move. Now, let's get straight to the action. At Morpheus Trading, we don't just celebrate wins, we study them to replicate success. From our entry on October 17th at 28,200 to our exit on November 9th at 37,500, this Bitcoin swing trade has not only been a winner, but also a teacher. Still holding half of our position, we're not just basking in the win, we're vigilantly planning the next steps. And you're in luck because we're sharing our strategies with you. How did we decide to sell half and not all of the position? How do we know which levels to set our protective stops? We cover it all in this video. By the way, members of the MTG Tribe are still talking about the precision of our BTC exiting near the peak, right before a substantial pullback. And that's the kind of precision that we teach in our Morpheus crypto chat room. With recent moves like our huge 94% gain in 3 back-to-back swing trades in SOL, we show that this isn't a one-off event, but a pattern of success with real verifiable trade entries and exits called in our chat room. By the way, keep an eye out for the final segment of this video where we break down the potential future moves of BTC. Finding the right entry and exit points is key, and we've got the insights that you need. So let's jump right in. And if you're keen to join a community that trades smart, hit that like button, subscribe to our channel, and ring the bell. Your trading game is about to change. Okay, let's start by walking through the charts to show exactly why we bought Bitcoin where we did. And for that, let's take a look back here at mid-August. We see this is a daily chart we're looking at. So each bar is 1 day of price action. And we see we had a big sell-off in mid-August on big volume. And that was in both Bitcoin and in Ethereum as well. And after that sell-off, Bitcoin settled into a consolidation range. And we'll go ahead and draw this rectangle so you can see the range that we're referring to. So this is about a 2-month period here from mid-August to mid-October where Bitcoin was really just oscillating, drifting sideways, chopping around. It found support on the lower channel of its range at its prior lows from June. You can see here the horizontal line that formed at the lows, which marks support of the lows of the trading range. On the upside, we also noticed some horizontal resistance that was holding Bitcoin down. If we draw this horizontal line right here, notice how with this horizontal line that this marked the highs of the initial breakout attempt on October 2nd when Bitcoin tried to break out. It stalled and fell back into the range because we ran into resistance of the prior lows. Remember that in technical analysis, the most basic tenet is that a prior level of support becomes the new level of resistance after the support is broken. So when we had Bitcoin throughout June forming this consolidation range, and then in August when it fell below that, this prior lows here, right here at this level, now becomes new resistance. And that's exactly what happened when Bitcoin tried to rally. We can see that it rallied right up to that price, which was right around the 28,500 level, rallied right up to that level and stalled, sold off and reversed back lower. But notice something different happened this time, and that is that after we ran into that upper channel resistance, that Bitcoin didn't fall all the way back down. It didn't come back down to the bottom channel of its range like it did before. In fact, it pulled back, but notice how it held above this green line, which is the 8-day exponential moving average. So it only pulled back slightly and then formed a tight range for about a week near its highs. Now, this caught our attention because this told us that we're seeing a bit of a change of sentiment in market character. And we talked a lot about that in the chat room, saying that the market's starting to change its character because we're not seeing the kind of selling that we were seeing before that when a breakout attempt fails. So even though the breakout attempt stalled on October 2nd, the price action remained tight and most notably held above this 8-day exponential moving average. So that really caught our attention. And about a week later, we did get a drop below the low of this tight range. But notice how the price came into support of the 50-day moving average, this red line. And the 50-day moving average is a closely watched indicator of intermediate term trend that plays a big role in our swing trading entries and exits, looking for making sure we're trading cryptos that are on the right side of the market. And when we pulled back to this 50-day moving average, this really caught our attention because it held. It held firmly. You can see here, if we zoom in, for 4 days, the price perfectly held above the 50-day moving average, which prior to that, it acted as resistance. 50-day moving average was resistance here. And then when we popped above it, that 50-day moving average became support. And so not only were we holding in a tight range before that, but when we dipped below it, instead of falling apart and falling back to the range, we held the 50-day moving average. So we knew that Bitcoin is starting to show improving price action and bullishness. So we figured that the sellers were drying up, and when the buyers stepped back in, we could see a breakout attempt. And that actually is exactly what happened a few days later. We can see here on October 16th that we got a big breakout. Notice volume spiked higher. This yellow line down here, this is our average daily volume. So you can see that Bitcoin's volume spiked to nearly 3 times its average daily level. So that volume was confirming major interest in buying the Bitcoin. And that's important because volume is the gasoline that drives rallies. So we had the kind of confirmation of higher volume. And so what happened to the price action? Well, that day, Bitcoin did pop above the prior high of the range, which was the October 2nd high at 28,500. It rallied as high as 30,000, actually just briefly kissed the 30,000 mark that day, but traders did sell into it and the price fell all the way back down and actually closed the day once again right at that pivotal level, right at the 28,500 mark is where Bitcoin closed that day. But nevertheless, this really got our attention because the fact that we were able to probe all the way above this range, we ran all these stops up here, people that wanted to get out of the trade. So that absorbed overhead supply, which means on the next rally attempt, there's that much less resistance for Bitcoin to overcome. So when we see this type of a move, our trading methodology is that we're constantly looking for swing trade entries that not only have high reward potential, but relatively low risk. So we look for relatively low risk entry points. We don't chase. We're always looking for high risk reward. And we spotted a very ideal opportunity to buy Bitcoin after this day's move. Okay. Because what we wanted to see was as long as we held near this range, we wanted to get back in to Bitcoin on the pullback. And this is a good time for me to talk about the yellow line because this is crucial. This yellow line you see here is the 200-day moving average. And the 200-day moving average we talk about frequently as an indicator of long-term trend. In fact, we just made a recent video we just made about Ethereum, ETH, breaking out above its 200-day MA, and Ethereum has been ripping since breaking out above its 200-day MA. So this is a very pivotal level. In fact, let's scroll back. Check this out. You can see going back now, this is going back all the way to 2022, but we can see exactly how the 200-day MA played out. Back in March of 2022, Bitcoin was trading below the 200-day MA, tried to rally above it, and notice how the 200-day MA acted perfectly as resistance. We sold off, stayed below that, and then finally in January of this year, we popped back above the 200-day MA, and as soon as we got back above that 200-day MA, that became support. Because notice how we tested that level in March of this year. We perfectly came down to 200-day MA support, held it, and that sparked a rally that led into the rally of the previous summer. In August, the price fell back below the 200-day moving average. So when it fell back below that, we began to closely watch this level for a move back above it. And notice how, even though we were talking before only about horizontal price resistance levels, the 200-day MA perfectly played a part too, because right here it acted as resistance in August, stopped the rally dead in its tracks. We stalled a little bit shy of it here. And then again, in the beginning of October, October 1st and 2nd and 5th, basically at least three instances here where the 200-day MA perfectly stopped the rally. So although we had this horizontal price resistance, we also had the 200-day MA working. And when you've got multiple resistance levels in the same area, that's called confluence. And when you've got confluence, the more moving averages and trend lines and horizontal levels that converge, the more powerful the eventual breakout when the price gets above it. So it's kind of like compressing a spring. The more you compress the spring, when you let go, it's going to expand and that's exactly what happened here. We had a lot of pressure with Bitcoin building up below this 2-month trading range and below its 200-day moving average. And that's why the price action spiked on October 16th all the way up to 30,000 on the first move. But remember, like I said, we don't chase, right? We typically don't chase the breakout. So if we don't get the breakout right at the breakout time, then we wait for the first pullback. And we didn't buy the breakout this day, so we waited, and our pullback came the very next day, October 17th, when we got a pullback that touched the 200-day MA. And the 200-day MA at that time was 28,001, just over 28,100. And what we anticipated was that the 200-day moving average would act firmly as support once we broke out above it and again ran the stops up here. And that's exactly what happened. The price pulled back to the 200-day moving average, and we sent a trade alert to our members of Morpheus Crypto, and we said, okay, this is our cue to buy. And we actually bought the pullback right around 28,200, just above, I should say, the 200-day moving average. And the price never really went against us. I mean, after we got that entry point, the price held the 200-day moving average and then took off. That's how you know when you're learning how to look for valid swing trade entries. That's how you know you've got a good entry is if your entry is correct, often you'll never even see the price go that much against you before the price takes off. And that's exactly what happened here is we bought 28,200 and then 3 days later, boom, the price exploded and took off. After Bitcoin broke out, 3 days later, we broke out above the 30,000 mark, above this swing high. And now it's off to the races with Bitcoin at a new 7-month high. And then only a few days later, Bitcoin breaking out to a new 52-week high. Notice how we had the confirmation of the higher volume here. So when we saw this breakout, the increasing volume, and that's when, after we're in the trade, now we start to closely watch the performance of the price action as it tests the 8-day exponential moving average. This is our short-term indicator of trend. And notice how after Bitcoin broke out, it perfectly held support of this 8-day EMA. And after we broke out in late October, Bitcoin entered into a sideways consolidation pattern that lasted for about 2 weeks, actually almost 3 weeks. We can draw that box here again. There's the consolidation, what we also refer to as a base of consolidation. So since we were long from 28,200, after Bitcoin rallied and formed its next basic consolidation, we already had a great profit buffer of more than 20% as we just sit and hold and wait for the consolidation to shape up. That's the beauty of swing trading, is that if you get the right entry points, you can often sit through a pullback in anticipation of greater gains. But in this case, we didn't even get a pullback. We just got a correction by time, which means the price action is drifting sideways. So we continued to hold on to Bitcoin as long as the price action remained bullish. In other words, the price action gave us no reason to sell and take our profit. So even though we had a 20% gain in a short period of time, we continued to hold in anticipation of a potential breakout above this range. Now, before we look at our exit and why we sold where we did, let's take a look at our stop price. Whenever we enter into a new swing trade and we notify our members that we're getting in a new trade, we automatically set a stop price as well. Setting a stop is important because obviously you're going to have losing trades. Not all your trades go the right way. And the key to being a successful trader over the long term is when you're wrong, you want to keep your losses tight. But when you're right, you want to let the profits ride. So by setting a stop in advance, that's how you assure that you're able to do that. You lock in, you dial in your maximum risk right when you enter the trade, and the profits you let ride. So at the time that we got in the Bitcoin swing trade, remember we bought at 28,200, we set our stop just below the prior day's low. Okay, so this prior day's candle here that we see, where the low of the day was right around 27,140, high of the day was 30,000. We set our stop for the swing trade just below this day's low, because if the pullback dipped a little bit below the 200-day moving average or the 8-day exponential moving average, that would be okay. It'd be a shakeout. But if the price came all the way back down below the low of this big breakout day, we don't want to be in it any longer. That's our cue to get out, because obviously the play is invalid if we get below that day's level. So we set our stop just below this level plus some wiggle room. Our exact stop was at the 26,880 mark. I've removed the other lines just to make it easier to see, and I've labeled the stop here 26,880. This white line is where the stop was, just below the low of the prior day's candle plus some wiggle room. You always want to have a bit of wiggle room, because otherwise you get hit with a stop run where people place their stops at very obvious levels of support, such as that day's low. So we give it enough room to be able to withstand a little bit of a dip below, but we definitely want to be out if the price came back below 26,880. In this case, the stop never even came into account because of the fact that the price never really even dipped below our entry price. But this is where our initial stop was. And as I mentioned, once we got a breakout above this consolidation, that was our cue to look to take some profits. Now, let's go ahead and dive into why we sold where we did and why we sold only half of the position, and we're currently still holding half of the position with a 33% gain. There are a few different factors that prompted us to take profits where we did. First of all, when we get this type of a consolidation over a several week period, what we prefer to see is a 1 day shakeout and undercut of support. So an undercut occurs when the price action of an asset dips below an obvious level of support, runs all the stops, and then snaps back above that level the next day. Often such undercuts are necessary in order for breakouts to stick once the price subsequently rallies. Now, in the case of Bitcoin, the price action was so strong that it perfectly held support of this 8-day EMA. Notice how that green line perfectly acted like the line in the sand, and that's a really strong indicator of short-term trend. Typically, if a trend's not that strong, the pullbacks will be to the 20-day EMA, this blue line. But when you got a really strong trend, it'll hold at the 8-day EMA. And during this consolidation, we had a couple dips below the 8-day EMA, just barely, and then we closed back above it. Notice 1, 2, 3 times, and we kept closing the day back above it. Now, what we would have preferred to see was a 1-day dip that basically tested or touched or almost touched the 20-day EMA and then snap back up again. That would have given us more confidence to hold the breakout because that would absorb the supply and the people that would sell too easily. But what we've noticed from experience, we've been doing this, we've been swing trading the strategy for 21 years now. And what we know from experience is that often, not every time, but often, when you get a breakout from this type of consolidation, if you don't get that undercut move first, then often the initial breakout attempt fails, right? And it's less likely to stick. So we had that in our heads going into the fact that when we broke out yesterday, we already had in our mind that we wanted to be kind of cautious about taking profits because we didn't get that shakeout move that we were anticipating. Instead, we just kind of drifted higher, which doesn't mean, again, that the breakout will necessarily fail, but it does increase the odds from our experience. But nevertheless, we did get high volume on the breakout yesterday. We got double the average daily volume, and the price did close the day above the high of the 3-week consolidation. So we've got a new swing high, which is important. But there was another factor that played into where we took profits, and that is the weekly chart. So let's go ahead and zoom out to the longer term weekly chart. Although the daily time frame makes the bulk of our decisions for entry and exit points, the weekly chart is important to monitor for longer term support and resistance levels that you may otherwise miss on the daily chart. So if we take a look at this weekly chart, we can see that going back to 2022, the beginning of 2022, that there was some resistance that we were aware of that we knew that Bitcoin could maybe have some trouble overcoming. And we can go ahead and draw that resistance. First of all, we had resistance of these prior lows from January of 2022. Remember, prior support becomes new resistance after we break below the support. So we knew that, first of all, there was going to be some resistance in this vicinity. And we can see that's exactly why we consolidated for several weeks. We first probed above that level, and then it took several weeks of consolidation to be able to get back above that first level. But then we also knew that there was a second level of horizontal resistance, which would be right here in this vicinity, where we basically had 4 weeks of lows right around the 37,500 mark. So this channel between here and here we knew was going to be a bit of resistance for Bitcoin to overcome. So when we broke out above the 3-week range yesterday, you can see that exactly what happened was the price rallied up to just above that 37,500 mark and then stalled and sold off. So we knew that there was resistance at that level. So we proactively made the decision to sell on partial position, lock in profits on half of the position into strength to lock in a 33% gain. So we notified members that we're selling half, but we decided to keep the other half to let the profits ride. And that's often a good strategy you can do. It's called scaling out of a trade when the price action still looks good and you want to maximize profits, but you want to take some profit off the table, such as due to seeing major resistance. So that was the main impetus for why we decided to take some profit off the table at the 37,500 level. And that was a good decision in hindsight, because if we zoom back into the daily chart, and in fact, let's go ahead and look at the hourly chart. So intraday chart, we can see here this white line, 37,500. That's right in the area where we sent the trade alert to tell everybody we were selling. As the price was rallying higher, we saw that. We said, hey, time to take some profit off the table. And just 1 hour later, that decision proved to be a good one, because the price then sold off sharply with some profit taking that took Bitcoin all the way back down to the 35,600 level before it stabilized. And now it's grinding back up, but still below our level where we exited the first trade. So when you see on the weekly chart, you see key resistance levels, it's often a good idea to sell into strength proactively and then keep partial position size on. Now, I mentioned that we've kept the trade on for half of the position size. How are we going to manage that? All right, let's zoom back out to the daily chart where I've labeled our exit. You can see our exit here at 37,559 happened to be the exact exit price we got near yesterday's high. And the stop, we raised the stop. After we take partial profits on a trade, we then raise the stop to lock in profits so that if the price action does reverse and we get a major pullback, we're not giving back all the profit that we had. So when we sold half of the position for a 33% gain yesterday, we at the same time told members that we're now raising our stop in Bitcoin. We raised our stop from 26,880 all the way up to 32,800. And I'll go ahead and move the stop up here and show you new stop price. Our new stop is 32,800 currently, and we set that stop because it's just below the low of this consolidation range. So this should now be major support, the low of this prior consolidation. We wouldn't want to see the price get back below that. So we've now comfortably moved our stop up, which gives us a 16% guaranteed profit. If we come back down and sell at the 32,800 mark, we still locked in a 16% gain on the trade. Now we'll look to trail the stop tighter once Bitcoin now forms a new basic consolidation above this prior base and forms a swing low. Then we keep trailing the stop higher to just below the base. But currently the stop is below the 20-day EMA and below the prior base, and that's a good spot for it. But we will look to tighten this stop as the price action allows and the price action moves higher. Now, if we get another rally in Bitcoin to the 40,000 area before a pullback, we'll probably look to actually just sell into strength, lock in the gains, and forget trailing the stop on the rest. But if, on the other hand, we enter into another period of consolidation for several weeks, then we'll look to sneak this stop up tighter to maximize our profits. Now, let's dive into where the support and resistance levels are on Bitcoin so that if you're not already long, you could consider a new buy point on a pullback, or if you are already long, you may want to know where to sell. Well, we've already talked about a stop price. And in terms of selling into strength, like I said, there's resistance around the 40K mark, actually just above 40K, around the 41,000 mark. We've got some resistance here that's going to potentially slow down Bitcoin. So if you're still long and you're looking to, not hold long term, then the next move to around the 40 to 41,000 area would be a decent place to take profits. If you're not already long Bitcoin, then where would you consider buying? Well, first of all, the first pullback to the 8-day EMA could be a relatively low risk entry point because the 8-day EMA is now rising and it's going to meet right at support of the high of the prior consolidation. So if we get a pullback that touches this 35,700 area and holds there, then that would be a relatively low risk entry point, as long as you have your stop in place just below the 20-day EMA in case the breakout stalls altogether. So once you break out of a range, it's not uncommon to do a retest of that range to test the support and then rip higher. But if the price comes back down, tests it, and it doesn't bounce, then you've got a failed breakout and you want to be out quickly. So if you're not already long, the first potential entry point would be around, again, the 37,500 area. If we got back much below that, then we'd rather wait and see what the price action does, because this consolidation now should become the new support. By the way, we also locked in a nice gain of 13% on our recent Ethereum entry, which we sold half of yesterday, and we're also holding half. We'll be doing another video walking through our ETH entry and exit points, so keep an eye out for that. And if you haven't seen it yet, be sure to check out our video on SOL that we published about 2 weeks ago, where we walk you through our exact entries and exits of several swing trades that led to a 58% gain in just a few weeks' time. And since then, we've had another trade in SOL with a 36% gain, giving us a total 94% gain in just 4 weeks in three separate swing trades of SOL. So our members of the MTG Tribe are obviously very happy, locking in a lot of gains following us on these trades. But as we mentioned earlier, it's not only about bragging about our wins. That's really not what we're interested in doing. We're more interested in helping you learn the methodology behind our entries and exits and teaching you how to fish rather than giving you the fish. If you enjoyed this video, don't forget to press the like button and subscribe to ensure you receive more fantastic content. And if you're not already a member of the MTG Tribe, head on over to morpheustrading.com and you can find out all about our awesome swing trading services proven since 2002.